What's up, guys? Thanks for tuning in and welcome back. If this is your first visit, my name is Matt, and here at Matt the Car Guy, normally I do car reviews, so you'll find me outside at the dealership, walking around the vehicle, talking about it and giving you a full car review. Today's video is going to be a little bit different. We're going to talk about a very important topic, something that's been starting to make headlines over 2 months ago, and it continues to do so throughout the internet and YouTube. You might have seen the videos that the car market is crashing in 2024. I'm going to give you my take on it. Is it happening? Will it happen? How deep will it be? I'm going to base it on the data that I found online, as well as my personal expertise. For those of you that don't know me, I started in the car business in 1997. I worked in the dealer's world in 2017, and now I still work for a company that services a dealership. So I'm still very aware of what's going on in the market, but I don't work for the dealership, so don't worry. I'm not going to try to sell you a car, or you're not going to hurt my feelings if you have different opinions than mine. This is what it's all about. If you have something that you want to ask, put it in the comment section below. If you have something that you want to add, do that as well. And if you disagree with me, put it in there as well, so we can have a discussion about it. In order to talk about the car market crash, we need to understand of what that is. Now, in order for the market to crash, we need to have a really super high inventory levels. We need to have super high interest rates. We need to have super high pricing, and there's no demand for the product. That's when the market usually crashes. So we're going to cover all aspects of it, starting with the inventory. So inventory levels, we need to go back pre-pandemic, 2019 and below. We had the new car inventory levels at about 3.5 million vehicles on dealers' lots or in transit at any given time. That means those vehicles were available for sale. Now, when the pandemic happens, as you remember, March 2020, a lot of manufacturing plants got shut down. A lot of manufacturing plants that were producing parts got shut down. When they restarted months later, they needed to ship those parts to the manufacturing plants. And what happened then? The supply chain got overwhelmed and they couldn't deliver parts in a timely fashion, which in turn caused a huge, massive shortages of new car inventory at the dealership. So remember the number, pre-pandemic, 3.5 million. We hit the all-time low in September of 2021 at 885 units. So about 4 times less than normally happened. The supply was really low. The demand was still really high. So what happens with the dealerships? What do? They start marking things up, right? They start selling at MSRP or above, which I don't know why people would pay over MSRP. I've been in the business for over 20 some years. It is simply against my religion to pay more than the manufacturer suggests that I should pay for the vehicle. But the demand was strong. People needed to buy cars. I'm not here to judge, but they were buying it. They were buying it for over MSRP 2020, 2021, 2022. In 2023, we've seen a little bit of a slowdown. And why is that? Well, if you live in the United States, you see that the economy was really not doing very good. The inflation was out of whack. The rates starting to climb up, and the manufacturing was catching up to the pre-pandemic levels. Fast forward to 2024, inventory levels are up, but where are they? January of 2024, we had over 2.5 million vehicles. In February of 2024, we had about 2 million vehicles, so slightly lower. But as you can see, they're going in the direction of pre-pandemic levels. Now, let me tell you something else. When the pandemic started, when the manufacturers started to restart their production and going full speed, a lot of CEOs of the companies, including Ford, comes out and say, hey, we're never going to make as many cars as we did pre-pandemic. That just didn't make any sense. We're going to start to make less cars, so create more demand for the customers. And, I don't think that's going to be the case. We're going to see in the years to come, but I think that the race is on, that they're racing to manufacture as many vehicles to push them out to the dealers and then turn to the consumers. So the inventory levels are not at pre-pandemic levels, but definitely much higher than they were. So that's why I don't think it's time to ring the bell yet that the market is crashing based on the inventory. So as far as the inventory, I wanted to do this video really in dealer's lot to kind of show you what's happening. And I was able to go to the dealership and take a little footage of what's happening at one of the Kia dealerships in my area. because in the past, you couldn't even touch a Telluride. Like in 2021, 2022, they were waiting lists and people were paying over sticker to get those cars. Now look at this right now. Here's my local dealerships, and this was the lot this morning. So we have all kinds of Tellurides, different trims, different colors, you know, anything that you need, you can find right here. And there's also, of course, other vehicles. And another thing that I want to point out are the electric vehicles. And here's Kia EV9. So you see some of the EV9s that are piling up, probably have, you know, close to a dozen of them. And of course, other models too. We have Sportages, Sorrentos, everything on this lot. But you know, if you look on the other side of the lot too, there's still plenty of room to grow because pre-pandemic they were parking cars in that lot as well. So that just kind of gives you an idea. And the second aspect of the car market, of course, are the rates that dictates the affordability of the vehicle, that dictates of how much money people have to spend on their car payment and how much car they can buy. And that goes for both leases and the regular financing. That's, you know, the same thing in my book. And if you look at the rates from 2-3 years ago, we had a 60-month rate at about 2.9%. Now we have a 60-month rate at about 8%. Big difference, right? Let me put it in perspective. A $40,000 loan on 2.9% rate would give you a payment of about $718 per month. If you do it at 8%, it would give you $811. So that's about $93 difference on $40,000. Now, of course, some loans are bigger or smaller, but that gives you in perspective, that's about 12-13% difference in the car payment. Now, as far as the affordability, did your salary go up 12-13% in the last 3 years? If it did, well, congratulations, but mine didn't, and I know a lot of people are in the same boat. So a lot of people can't afford to swing another 12-13% in their car payment to buy the same vehicle. What does that translate into the car market crash or the dealer's world? So I did some calculations, and if you were to have a payment at 8% of $711, you'd have to finance about $35,000, give or take. So $5,000 less on the vehicle. That $5,000 is going to have to come from somewhere, right? It's either from your pocket, if you have the down payment to put it down to keep your payment at the same level. It's going to have to be in the form of a dealer discounts or manufacturer's incentive. Now, a lot of people don't have or don't want to spend the cash right now, and I don't blame you. So they're looking for some concessions as far as the pricing or from the manufacturers as far as the discount. And we are starting to see that for sure. So the inventory levels are rising. They're not there yet. The discounts are starting to pop up in the dealer's world, as well as some incentives. Now, if 2 years ago you asked Google and say, hey, Google, what would be the vehicle that I can get 0% interest for? They would laugh at you through the computer speakers. I guarantee you that there were no 0% financing, no incentives on the vehicle whatsoever. As a matter of fact, if you didn't want to pay for the MSRP, the dealers would be like, hey, there's a line of people that we have for that, so beat it, right? Short-term thinking on dealers' side, I don't agree with that, but that's what happened. You know, we can't change the past. What happened. It's going to affect the future. Because right now, we had 10 different vehicles in February of 2024 that had 0% financing. And that's were Fords, Mitsubishis, even a Subaru. The electric Subaru had 0% financing for up to 72 months. Those are the vehicles that are usually harder to sell, maybe not as popular, but they are starting to come up with the incentives, which we haven't seen in a long, long time. Now, in all of my time in the car business, I've never seen dealers not advertise other than the last few years. You wouldn't find dealers advertising at all because they didn't have to. You know, people would come in anyways and buy the cars and, you know, pay them premium dollars for it. So they didn't have to advertise for it. Now you start seeing advertising. You start seeing them advertising some discounts. You go on the lot, you see some sale tax stickers on it. But again, this is not enough squeeze yet for them to really drop their pants and give you the bottom line pricing. Now, some dealers are, you know, ahead of the game. So some dealers are going like, okay, well, I might as well get rid of some of the inventory now. They're going to produce more. They're going to give me more, and I'm going to be able to sell it. I'm going to satisfy the customers. But a lot of dealers are still hanging on to the higher pricing. So I don't think this is happening yet. So the car market is not crashing yet, but let's wait because there is more. Third aspect of the car market is, of course, the customer demand, because that ultimately dictates the pricing of the vehicle. So the more people want the vehicle is going to be more expensive. The less people want it, it's going to be less expensive. Simple as that, right? And the customer demand, based on some market research, is still fairly strong. Now, we don't know where it's going to go because the economy is really kind of lingering right now. It's not really going up. It's not really going down. This is the election year. I don't foresee, a lot of huge moves, changes, etc. The rates probably will be steady throughout this year, and I don't think the economy is going to change much. But the customer demand is strong. It might be dropping a little bit because of the affordability of the vehicle. So people might go for vehicles that are less expensive. Also, the second thing is the gas is going up. So as the gas goes up, there's going to be more demand for the vehicle that are more gas efficient than, something that are more of a gas guzzler. So that, keep in mind that as well. So I want to come back to something else. All those people that paid over MSRP in 2021, 2022 are going to be taken out of the market as potential car buyers for the next few years. Well, let me explain why. If somebody pays over MSRP, if let's say they pay $50,000 on a $40,000 vehicle, and then that vehicle adjusts, like right now it is probably to about $25,000, $30,000, they automatically are in the soup or upside down or in negative equity situation, however you want to call it. And they're gonna, in order for them to trade or sell this vehicle, they're gonna have to do one of two things. One, come out of cash, out of their pocket, to cover that negative equity in order to get into the new vehicle, or finance the difference, right? So finance whatever the negative equity is in the new car. Now, if you have the ability, if you have the resources to bite the bullet and you want to do it, go for it, right? But most people are financing the vehicle, and that's where the problem starts to happen, because banks are not going to finance the entire negative equity for the most part. They also have their limits, their thresholds, and they're getting tighter and tighter as the prices are going down. So they're not going to finance $60,000 on a $40,000 vehicle. That's one thing. Second thing is that even if they do, now you're going for a 3% rate to an 8% rate, which is going to further inflate your payments. So for the same vehicle that you're going to trade up for the new one for, let's say instead of paying $700, you're going to be paying $900 or $1,000. And that's just not a smart thing to do. Now, I'm not here to spend your money, but, it's a simple math. So that's going to take out all of these people that took out the loans, from the market, because they're not going to be able to pull them ahead from the leases. They're not going to be able to pull them ahead from the financing. And that's going to slow down that customer demand even further. So if it's not a good time to buy a car right now, when would be a good time to buy a car? Well, I don't have a crystal ball, but I would wait. And I'm going to tell you why. I would wait at least another 3 months. The inventory levels are start going up. The rates are probably going to start dropping down, but I don't expect anything to happen like drastically. I didn't expect coronavirus, but it did happen. But other than that, if it's going to continue the way it is right now, I think we're going to have some better opportunities in the next 2-3 months than we do have right now. And that's because of several different factors. The inventory level is still going to climb. The rates are going to be probably just about even. So we're going to have more cars on the lots. So the manufacturers and the dealerships are going to start to think a little bit outside of the box, maybe in form of a deeper discounts, more manufacturers, incentives, etc. And then another thing is, in the next few months, we're going to have the new model year starting to drop at the lot. So 2025 model years are going to be available. That means that they're going to try to clear 2024 model years, and those are the vehicles that are going to be the best deals, probably sometime between June and August. And I'm going to do another video maybe in June to kind of update you and see what's going on then. If you're looking for 2025, maybe something brand new is coming up and it caught your eye, you might want to wait till the end of the year. And the reason for it is that all manufacturers have the certain numbers that they project for the year, for the sales, right? They project it to the public, they project it to their stakeholders, and they try to keep up with that. So depending on what happens, we're going to finish up Q1 at the end of this month, and we're going to see what their numbers are comparing to, the previous years. And then they're going to start adjusting, right? But it's going to be more apparent at the very end of the year where they're going to try to chase their numbers for the year. So if they're missing their numbers, there are going to be some crazy incentives. Now, If you're looking to get a 50% off on the vehicle, that's probably not going to happen. But I got to tell you, there's already some vehicles that the manufacturer's advertising for 20% off MSRP. If you don't believe me, look up Jeep Gladiator. That's one of them. If it's not your cup of tea, there's other vehicles that are having some tremendous discounts already. But I would wait. This is my advice. You do what you want with your money. And let me know if you agree with me, disagree, maybe you want to add something to this video. I love to hear your comments, guys. Thank you very much for watching. I hope this was helpful for you, and if it was, do me a favor, hit that subscribe button, give me the like, and turn on that bell notification ring bell so you won't miss any of the content that's coming out, and I'll see you in my next video. Cheers.